Hello everyone, welcome to Smart Investing. Okay, this is the time for market update. The market just closed. So let's go straight into it. But before doing that, please subscribe, smash the like button, and leave a comment. Thanks so much. I appreciate every single one of you who have subscribed and those who are watching this video. This is the beginning of a new adventure, so please help me to grow this channel. Thank you so much. So let's get into it. So let's start by the usual QQQ. Very, uneventful session today for a change. Excuse me. For a change, nothing much really happened today. Yesterday also, nothing much really happened. Of course, do you have intraday volatility? That is quite big. Yesterday we had much more intraday volatility than we have today. And you see, we are closing more or less the same level as yesterday because we are minus 0.04%, and 2 seconds later we were slightly positive, and 20 seconds before we were slightly negative. So just nothing really happened today. So it's good because the market is just wait and see. And really, we're going to make it short and quick because there is not much to talk about. So we can see that technically we are still far above the lows of this crisis because we are clearly well above 11%. Yeah, close to 11% from the lows, which is quite a good sign, and we are still hovering at those levels. The RSI is still around 50, and you see the volume is extremely low. Huh? The trading volume we are seeing here, it is much lower than the trading volume we have seen during the lows and during the highs of the VIX. So you see, it's really indicating that all the shenanigans and all the drama and all the uncertainty about the tariff has been fully priced in. Unless there is something new that is happening, of course, there can be always a tweet or whatever. The market seems to react for everything right now. So it can be anything. The market overreact, and then we plunge again, and we go testing the old lows, and maybe breaking and just going through new lows. You never know. But it will take something very meaningful and serious to really crash the market from this point. But anyway, everything is possible. We have been very surprised over the last 2 months what Donald Trump or investor overreaction can be. Now, if we go to the SPY, same, huh? Very flat today, very uneventful. Yesterday, the daily volatility was much higher. You can see by the candlestick here. But you see today, very narrow candlestick, and we are still right in the middle and same level of yesterday. So nothing really important. You see TLT, same, huh? We know from John Paul that they are not going to decrease rate anytime soon. He made it quite clear, as long as you don't see inflation meaningfully decreasing, as long as it doesn't see a dislocation of the employment market, then he's not going to touch rate. Why should he touch the rate? I know Donald Trump wants the rate to go down, and I know this will help the economy to really accelerate. Because if you decrease rate, of course, everybody has the means to make a loan, refinance their home. Maybe we just kickstart again the real estate market and so on and so on. So there is a huge benefit to decreasing rate. But somehow, John Powell, as indicating, he's not willing to do that for now. So let's see. Maybe he's keeping some ammunition for when there is a meaningful recession that is coming, or maybe when there is a huge shock in the market. So he got a huge ammunition to go from the 4.25, 450 to decrease to 1% or even to zero like the COVID. So you see, I understand why he wants to keep some ammunition. So the VIX came down today by 8-9%, still much lower than the 60, but still elevated historically at the 30 level. Now, if we look at the Max 7, slightly negative today at minus 0.65. So what can you do? Minus 0.65. We have not tested yet the new lows, but the lows was around 39. So I think the Max 7 are fairly priced right now. Huge deal, and if there is no significant crisis, and we're going now to the earnings season, so we're going to get the real data on what the CEOs and the company financials and what they expect the tariff will be on the projection and the guidance. And this is going to make a huge difference in the market, whether negatively or positively. Because now, during earnings seasons, the investor only focus on the real numbers and data, and most importantly, the guidance. Don't expect the market to react to whether they beat or don't beat the estimates, but be ready that the market will react or overreact to the guidance. That's my take on what will happen during the earnings seasons. Otherwise, nothing much really to talk about. Everything seems to be very quiet. Everything seems to be quiet, so I don't think that we should spend a long time to talk about this. Otherwise, the big shares that we have in my portfolio, AMD, very flat today, minus 0.9687 is the very nice price to start to build a position if you don't have, or to DCA Palantir 93. 93, you see, very nicely resisting. Palantir, you see, for a share that is at least 100 times the earnings or sales ratio, is still holding really, really strong despite this huge volatility in the market and risk aversion, It's only 25% down from the high, 25% down from the high after a rally of a few 100% in 1 year. So you see, it's just an amazing company. And investor has a lot of faith in that company. They don't want to sell, even panicking, selling the Palantir is not a tool into the agenda. They want to keep it firm, SMCI also holding really firm at this level. So this is really a strong indication that $30 is a very, very, very good price. For SMCI, the price to earning ratio on the trading basis 12 months is close to 14 times, 14 times for a high-tech company that is heavily involved into AI, infrastructure, and so on. This is an amazing price for a tech company, Is priced as a boring company. It's not a boring company, And one day it will skyrocket again. Okay, let's go now to the calendar economic. Yesterday I focused on the Fed speech, so I missed the data to give it to you. So retail sales yesterday was very good. Overall beating expectation and quite massively beating expectation. Retail year over year is 4.6%. So it doesn't seem like although the consumer is pessimistic, they don't stop spending. So maybe we're going to see in the next few data on the consumer spending, but so far so good, Retail sales, nothing to worry about. At least I have no sign in the numbers I'm seeing right now that there is a deceleration on retail sales. Today we had also good news, continuous jobless claim in line with expectations, slightly higher, but nothing meaningful. But initial jobless claim very, very much lower than what the forecast has been given. We are forecasting 225,000. And we ended up with 215,000. I mean, that's great news. So far, despite all the noise, all the fear, all the bearishness, all the talk about the impact of tariff, we are not seeing anything at all being materialized in the economic data. And if you disagree with me, I would like you to tell me in the comment below in the section why you disagree, and show me the data that really support the narrative. We're going to a severe recession, economic contraction, and then we're going to see a lot of massive unemployment. Maybe this is coming, but so far we are not seeing it at all in the numbers. Tomorrow, nothing special, so this is it for the economic data. Now we're going to see the headline, no surprise. Still the same headline as usual. Nothing changed. Stock rebound fizzle as Trump goes on offensive on the tariff and the trade war. ECB has cut the interest rate again. As Trump tariff fear threatens recovery of the Eurozone. So you see all the ones who are fleeing to the safe haven of European stock and bonds. I think these ones are going to be for a nasty surprise, because I don't think that the European market is a safe haven. I understand people are scared about what Donald Trump is doing, but anyway, I still think that the US market is still the strongest and the most resilient equity market in the world. And why? Because they simply have the strongest and the most resilient and the most performing company in the world. And these companies are global companies. They make business all over the world, And especially if you go into tech company, they are leading the AI revolution and the next industrial revolution that we call the digital revolution. And I don't believe that the European companies are nowhere near what the US company can do. And I don't think that the only competitors is China. And China, who wants to invest in the Chinese market? When you see what the CCP can do and the government can do to intervene in the market. I wouldn't give my hard-earned money to the Chinese. Not because I don't believe into Alibaba and all this tech company, but I don't believe in the Chinese government. Anyway, still the same headline, tariff, all the fear, and so on and so on. Nothing really has changed on that, you see. There is all this discussion about Trump and Powell, you know. Anyway, this is all about noise. This is nothing about the reality. Let them talk, let them speak, let them speculate. But at the end of the day, we stay firm on our investment. We have conviction on the company we have invested or into the indexes we are invested. We take advantage of this crisis to DCA, to increase the holdings at meaningful discount. And then you will see in 1 year, 2 years, 3 years, 5 years, we are all going to celebrate and congratulate ourselves. And we're going to look back at the video I'm doing right now, and we're going to see, yeah, you see, excuse me, right in the middle of the crisis, we hold really firm. We actually were doing what is the first investment rule for long-term investor is don't panic sell, stay firm, ride the volatility, and go through the other side of the volatility, and you will be rewarded on the long run. Don't try to time the market. Don't time to play in and out, because this game, very, very, very few people are winning this game. So the best is to stay invested. You invest the money you don't really need right now. You have an investment horizon of 3 to 5 years, and everything will be fine. I challenge you to do a rolling 3 years and 5 years onto the S&P 500 or the Nasdaq to see more than 1 or 2 occasions where you have negative return. I challenge you. It took extreme scenario like the 2000 crisis, maybe the GFC crisis, to get a negative return over 5 years. Over 3 years may be more common, but even though over 3 years, very, very seldom. Very seldom. But over 5 years, almost impossible to get a negative return. So again, focus on the long term, focus on strong companies. If you don't know which companies you want to invest in the QQQ or the Max 7 funds. Invest in the S&P 500 if you don't want to have too much risk into the tech sector. I invest in the tech sector mostly, not the S&P 500, because I believe it's the future, you know, and this is where the maximum growth will be. And no point to dilute your growth engine and your return engine with 400 and whatever company that will not have the same growth as the top leading tech company in the world, you know. No point to do that. The technology will be the fastest growing sector in the market over the next 5 years, like the same it has been over the last 5 years. So having said that, thanks so much for watching. Don't forget to subscribe, smash the like button, and leave me your comment. Have a good evening. Thanks. Bye.